Hello everyone, I still Mohammed Sancho Kablang. Welcome to another exciting video. And today I want to, talk to you guys about Bitcoin futures. Okay, I want to let you guys about Bitcoin futures. Now this video is sponsored by BTCC. Okay, BTCC Trading is an online platform or exchange where you can trade Bitcoin futures. But before we talk about BTCC, we have to talk about Bitcoin futures. Okay, so what is Bitcoin futures? Okay, now you probably know about Bitcoin, but I just want to let you know that Bitcoin futures is not the same thing with Bitcoin. Okay, when you go and buy Bitcoin or invest in Bitcoin, you're actually buying the coin itself and you are storing the coin in your wallet. Okay, but with Bitcoin future, okay, it like it says here, it allows investors to gain exposure to Bitcoin without having to hold the underlying cryptocurrency. So, which means that an investor can buy Bitcoin futures in order to have Bitcoin, in order to invest in Bitcoin, but without having to store Bitcoin himself. Okay, so what it means is it allows investors to get exposure to Bitcoin without having to hold the underlying cryptocurrency, like a futures contract for a commodity or a stock index. Bitcoin futures allow investors to speculate on the future price of Bitcoin. So, Bitcoin futures allow investors to speculate on the price of Bitcoin without having to hold Bitcoin itself. All right. So, the Chicago Mercantile Exchange, which is CME, offers monthly contracts for cash settlement. This means an investor takes cash instead of physical delivery of Bitcoin upon settlement of the contract. So when the contract is settled, okay, you're not giving back Bitcoin, rather you're giving back cash. All right, you are giving back cash. All right, so let's move further to make to discuss more about Bitcoin futures to make you understand what Bitcoin futures is. Okay, so to make you understand what Bitcoin futures does or why you should be interested in Bitcoin futures, okay, we look at benefits. Okay, benefits of trading Bitcoin futures. Okay, instead of the underlying cryptocurrency, instead of Bitcoin, the benefit of trading Bitcoin futures instead of Bitcoin. Okay, so first, the contracts are traded on an exchange regulated by the Commodity Futures Trading Commission, or that's CFTC. Okay, which might have large institutional investors, sorry, which might give large institutional investors some measure of confidence to participate. Okay, so you know, in the cryptocurrency space, there is less regulation compared to what you have in the paper money, you know, area. Okay, let's talk about when you talk about stocks, you talk about bonds, you talk about commodity trading and stuff like that. There is more regulation on those aspects compared to when it comes to cryptocurrency. And investors are skeptical. Okay, when you hear whales in cryptocurrency space, these are the investors. Okay, now these are the platforms that offer Bitcoin futures trading. Okay, because they buy Bitcoin on behalf of their clients. So their clients are skeptical about participating in non-regulate on the cryptocurrency space that is not regulated. Okay, but through Bitcoin futures, it can be regulated by CFTC. Are you seeing it right now? So through Bitcoin futures, it can be regulated by CFTC. But these investors, these sophisticated investors, do not have time to start counting how many bitcoins that they have. Okay, they don't want to even bear the risk of owning a wallet. Okay, because there are risks associated with owning a wallet. Not just talking about having your coins on an exchange, but owning a wallet, like forgetting your password. Are you get what I'm saying? Like having your phone stolen, stuff like that. Stuff like so. They are very paranoid when it comes to managing assets like Bitcoin. So the best way for them to get involved in Bitcoin big time is through Bitcoin futures. Okay, so that's why the large institutional investors, when they will talk about institutional investors, you might even talk about banks, you might talk about big corporations like insurance companies, those companies that has those institutions that have large amount of money that are looking for assets to invest in, but they don't want to go and buy Bitcoin. Rather, they want to invest in Bitcoin futures. So, and also the contracts are regulated. Unlike Bitcoin, this system that is not regulated, Bitcoin futures is regulated by CFTC, okay, which is the Commodity Futures Trading Commission, and that is why investors find it comfortable to buy Bitcoin futures rather than to buy Bitcoin itself. So number two, okay, because Bitcoin futures are settled in cash, okay, no Bitcoin wallet is required. No physical exchange of Bitcoin takes place in the transaction. So Bitcoin futures, like I said, the contract, okay, is settled in cash. So that way, the investor has no business with Bitcoin. Bitcoin is not moved or exchange hands. Bitcoin is not involved in the transaction, and no Bitcoin wallet is required. So at the end of the contract duration, okay, at the end of the contract duration, the investor gets back his cash. Okay, the investor gets back his cash. Okay. So below are the contract details for Bitcoin futures. Okay, this is offered by CME. For example, like this is what a Bitcoin futures contract looks like. Okay, the details as offered by Chicago Mercantile Exchange. Okay, so contract unit 5 Bitcoin as defined by CME-CF Bitcoin reference rate. So these big investors, they don't buy contracts. They don't do tiny fractions of Bitcoin. Okay, Bitcoin futures enables them to buy huge amounts of Bitcoins without even touching the Bitcoin. So if they're investing in the like the contract is going to be like 5 Bitcoin. Okay, so his investment amount is going to be the equivalent of 5 Bitcoin. Okay, so the price quotation is USD, trading hours Sunday, Friday. So product code BTC, listed contract listed for 6 consecutive months and 2 additional Decembers. Settlement method, financially settled. Okay, so you find out that they can now trade. Okay, they can now have the investment traded for them. Okay, if I understand it properly. Okay, they will have the investment traded for them, and the contract duration for this activity is 6 consecutive months plus and 2 additional Decembers. I don't understand what that means, but it's just part of the contract. Okay, so it's financially settled. All right. So most of these exchanges are settling based on are using USD Theta, because USD Theta is kind of a cryptocurrency version of the US dollar. Okay. Sorry about that. Okay. All right, guys. That's it for this video. Just want to let you guys know and understand what is Bitcoin futures. Okay. All right. So till I see you guys next time. If you have questions about Bitcoin futures, ask in the comment section and I will address them. Until I see you guys next time. Take care. Bye for now.